Welcome back. You're still tuned into Commodity Corner right here on ET Now. And now that we've discussed how and why you should invest in commodities and the different types of commodities, let's move on and understand how gold has performed versus Nifty over the last few years. We tried to analyze return data of gold and Nifty of the last 25 years. And gold data shows that during the period 2004 to 2009, and 2009 to 2014, gold has actually outperformed, but equity has clearly delivered consistent returns over the corresponding period. Does it then make sense to invest in gold as an asset class? Let's ask Feroze then. Feroze, coming to you, if we go by the last 5, 10 or 20-year returns, gold has clearly given aggregate lower returns as compared to Nifty. So then why would one want to invest in commodities? Do hedging benefits actually overweigh lower returns from equities? Does it make sense to invest in commodities as a hedging mechanism?
Shesha, I personally think I would not look at gold as an alternative to equity. That's why I said there are two growth assets, real estate and equity compete with each other. Debt and gold, to my mind, compete with each other. Why? Because debt is today in India at 10-year GSEC, Government of India, if you lend, which is risk-free, is about 6.9%. Taxation is marginal tax rate. But gold, if you compare with debt, both on the taxation and the return perspective, is higher. Of course, gold is not as safe as debt, but if you're looking at long term, especially given how rupee depreciates because of the higher interest rate, gold becomes not just a hedge to equity, but also becomes a hedge to currency, which debt is not. So I would not want to compare a straight comparison between gold and equity. I would rather, if I am sitting on 40% debt, which quite a few Indians love debt for no reason, it is like smoking or alcohol. Of course, you enjoy it in debt. You get so much comfort and happiness when you own debt. But in the long run, it will definitely harm you against inflation. So I would say these two assets fight, and I'm sure gold wins over debt any day.
So then, Feroze, what would you recommend to our viewers? How much percentage of portfolio should actually be allocated to commodities, especially gold?
You see, there are different thumb rules because it's a one-to-many communication. You have lakhs of viewers. I would want to say, I'll give one thumb rule. Your debt portion should never be greater than twice your gold portion. So if you have 10% in gold, you can have 20% in debt at best. So if the numbers, if you can have your debt plus gold portion together as 50-50.
Feroze, one more follow-up question. Does an SIP in gold or silver like equities make sense or absolutely no?
I personally think anything which is meant for protection need not be staggered because the volatility in gold is lesser than in equity. I would not require. I'm trying to hedge something. So co-hedge karna seems a little double hedging kind of, because SIP helps you gather an asset over longer periods of time because of the price volatility. My risk mitigation tool, I don't want to be so bothered of mitigating risk in a risk adjustment tool.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits, and then break right through them. Become something more. It's my time to rise.